For many, many years, the story has been that traditional finance has always turned their nose up and has laughed at the cryptocurrency space. But, taking a snapshot of today, we look at what's happening, and those same institutions that 5-10 years ago dismissed us are actually fighting each other pretty aggressively to launch their own crypto ETFs. It's happening also a lot faster, I would say, than anybody really expected. And the approval of really just one of these could be a major catalyst for, the project in question, but also the broader space. But 3 ETFs would be a very different story. That could truly ignite a historic bull run for the ages, because these are ETFs that could legitimize the entire industry overnight. And so in this video, there are 3 projects with a very high probability of ETF approval. I'm going to show you how these ETFs could finally bridge Wall Street and Web3, and how this is a moment that we find ourselves in right now that really could redefine the future of digital assets in a pretty exciting way. Welcome to the channel. My name is Maddie, and this is Altcoin Buzz. All the best of luck if you choose to invest. I do wish you well. Just remember, I'm not a financial or investment advisor, nor is this video official financial or investment advice. So just before we get into these projects in particular, we have 3 that we're considering in this video. I think it's worth considering, whether or not these are ETFs that can actually launch in the context of a government shutdown. Normally, the answer to that would be no. Yet we also apparently have 3 spot ETFs that are going live tomorrow. So we need to kind of explain what's going on here. By now, you probably should be familiar with this S1 form. This is the initial registration statement that is filed with the SEC, the Securities and Exchange Commission. Here's a sample of this S1 form. And when filing a crypto spot ETF, this is an important first step in terms of the form, in terms of the registration process. And it's something that we've seen before. We've highlighted it for the various projects in which we're interested. Okay, however, there's also another form that is very essential. This is the 8A filing form. This is a form that registers a company's securities for trading on a given exchange. And for crypto ETFs, it signifies that the fund is one step closer to being approved and being able to start trading. The filing itself does not equal SEC approval, but it is a procedural step that has to be completed before the ETF shares can be listed and offered to the public. This form requires filing under the Securities Exchange Act, which goes all the way back to 1934. And the S1 form registers them under the Securities Act from a year earlier, 1933. So the 8A is another, let's call it critical, essential form that needs to be filed. But the plot twist is that typically the SEC needs to approve these filings. However, the 3 projects that we're talking about were very savvy because they inserted some add-ons in their filings, meaning that they amended their S1s in a way that let them automatically go effective 20 days after filing. In other words, the SEC doesn't need to technically approve them manually. So even though we have a shutdown at the moment, again, that is the context, the filings can go live on their own. And as journalist here Eleanor Terrett mentions on X, these projects did a good job of ticking all the required legal boxes. Eric Balkanis also confirmed that these 3 ETFs will launch tomorrow, and he's a senior ETF analyst for Bloomberg. However, the caveat is assuming there's not some last-minute SEC intervention, which is always possible. Barring that, they can begin trading without a separate new SEC sign-off for each fund. And that's because of the new exchange, adoption, and automatic effectiveness procedures. There's a whole legal backbone to this, including variables and considerations of SEC rules and prior staff interaction, exchange rule filings, and issuer S1 8A filings. But in short, they are launching because all of that regulatory paperwork is in place. It's been taken care of, like the filings and exchange notices, not because the SEC ignored them. So that being said, with that context, with that in mind, let's take a look at these 3 specific new spot ETFs. Quick shout out to Surge here. This is our risk-free prediction game that's available on Telegram. And in this game, you just swipe left or right. You can kind of think Hamster Combat or even Tinder. You're swiping to guess whether a crypto asset pumps or dumps. And in the process, you earn rewards. And actually, hopefully, you can pick up some market skills as well while you're at it in the form of technical analysis. They've also kicked off a weekly giveaway. It's a contest that is super simple. Every week, there's a coin of the week. This week's coin is JUP. And all you have to do is swipe to find it in the Surge app. Then once you see it, screenshot it and then drop it under their tweet. One random reply wins $50 in USDT. It is super easy, but in order to win and have a chance at winning, of course, you have to at least participate. So check out Surge, have some fun swiping, and maybe snag some cool prizes along the way. Check out the links, the URLs in the description of this video below to participate. So the first spot ETF that I'm going to cover today is the Bitwise Solana SOL, SOL spot ETF. To top it off, this is also a staking ETF, therefore very attractive. Attractive, of course, because you can earn passive income from it. And that is, of course, by staking SOL. And all of this, by the way, without having to actually own the asset, which, you know, may not be your cup of tea, but the fact is that's a very appealing structure for a lot of investors out there that are not necessarily neck deep in crypto. It's just an added convenience. This ETF is going to go by the name of BSOL. This actually makes it the first ever US ETP to have 100% direct exposure to spot SOL. And as a bonus, like I said, it offers the over 7% staking rewards on SOL, currently with 0% fees because Bitwise is waiving them for at least a limited time. The website is also live. And then in addition, there is a grayscale spot ETF that's supposed to launch a day after these ones that we're talking about in this video. At least that's according, again, to Eric Balkanis. That's what he wrote on X. And so the suggestion here is that there are some exciting times ahead. The strange thing, however, and I can't quite square this. If you have a theory, let me know your thoughts. But the price of SOL has not really moved. It's just sort of gone sideways for a while now, actually. It's been hovering around the $200 range, despite all of this positivity kind of under the hood. I find it weird because personally, I see Solana and SOL, of course, really as one of the blue chip runners during this quarter. But these numbers are just strange. It's bizarre. Again, let me know your thoughts about it. Altcoins are finally on the move once again after what's been a pretty tough 2025 so far. People are getting the feeling that altcoin season will finally start soon if it hasn't already, which it has according to some. And SWI is having a great 2025 so far, bucking the trend from most of the first half of the year while still growing right now. It has quickly become one of the leading altcoins in this market and is even up over 240% in the last 12 months. And that is for a few different reasons. First of all, SWI is killing it in all the big sectors it supports, including DeFi, where SWI already crossed $2 billion in TVL. SWI also has some of the fastest stablecoin growth of any chain, so that people are using it for real-world pragmatic transactions. Walrus is changing the game in decentralized data storage. Its token launch was a big hit, while Seal and Nautilus make things more secure and more private. And SWI Play 0x1 has been shipped now, and many people that have ordered it are already playing with it. SWI even has a small but growing meme coin market for the meme coin lovers out there. So if that's your jam, then you're covered as well. If you haven't yet used SWI or haven't done so lately, then come give it a try. And also follow SWI's X account for all the latest updates and announcements. Check out the link in the description of this video below. Hedera and the HBAR spot ETF by Canary Capital is the second one on our list here. The Nasdaq has officially posted the Canary HBAR ETF. The ticker there is HBR. In listing circular. And we have BitGo and Coinbase Custody, who will be the official custodians, and CoinDesk Indices are going to deliver the official pricing. Now, Canary Capital's CEO, he goes by the name of Stephen McClurg, he posted this. Tomorrow is a long time coming. So the HBAR ETF gives institutional investors regulated access to Hedera. There's no need to hold crypto directly for this one either. That's one of the advantages of a spot ETF. The issuer holds the underlying asset. Again, that may not be your preference, but you're probably at least a quasi-veteran of this space if you're watching this video. To somebody else, to somebody in the ETF world, this is a bonus. This is a plus. Because as a buyer, again, if you're just an arm's length fan of cryptocurrency, there is no need to visit a crypto exchange to have a crypto wallet. The fact is that many investors, especially institutions, obviously do see this as an advantage. And again, bizarrely, in contrast to SOL, the HBAR price has responded to this, not only a little bit, but as you can see today, HBAR is up over 16% on the day. We're just below 21 cents as I record. And zooming out just a little bit here, we see over the last 7 days, HBAR is up over 21%. And if you bought HBAR a year ago, you're now up over 325%. As far as what the future holds, some accounts see HBAR now going as high as 48 cents, which, as you just saw, would represent more than a doubling in price. All right, and last but not least here, we're covering what is kind of sometimes the forgotten stepchild of Bitcoin in a way. We're talking about the Canary Capital Litecoin LTC spot ETF. When it comes to a lot of crypto OGs, the mention of Litecoin may get their hearts racing a little bit. That's assuming, of course, they diamond-handed their LTC bags. I did, not that I'm proud of it. The LTC spot ETF is a fact, and it's a reality, and the ticker is going to be LTTC. The LTC price kind of has reacted in the middle of the road kind of fashion between what we saw with Solana and Hedera. Positive reaction, although very moderate. The current price of LTC is just below $102. That's up just under 4% on the day. But could this represent a catalyst to pump LTC to $400 and beyond, perhaps new all-time highs? I'm skeptical and a little bit pessimistic, to be honest. I don't think it's personally enough, but the big question is what it's all really going to do to the respective prices of these assets. Because if you think about it, the BTC and ETH ETFs triggered very short-lived price surges, around 5, 10, 15% in some instances. And those were followed by retracements once all the hype cooled. It was a little bit of buy the rumor, sell the news. A lot of inflows during the first week are liquidity-seeking arbitrage trades, not long-term holdings. So for the medium term, I would say ETFs can stabilize and support gradual price appreciation, but it's going to be a lot of those jagged, enthusiastic peaks, again, followed by retracements in all likelihood. So just keep that in mind. But that being said, there's a lot to be happy about here. Staking options like the SOL ETF are very beneficial. But for Hedera and Litecoin, price impacts will depend pretty heavily on whether funds gain liquidity depth and index inclusion. They also have smaller ecosystems and fewer narratives. Arguably, they're less relevant right now. So certainly these ETFs could lift prices, again, modestly. They can also deepen legitimacy, especially for Solana, I would argue, and this does have strong institutional and DeFi traction. However, they likely won't create instant wealth for issuers. That's going to take more time, and this is a first step. It's a positive step, granted, but it's a first step. The biggest value may actually be credibility and visibility. Again, in the case of Solana that I keep using here as the poster child example, it positions Solana as a mainstream investable asset. I see this for Hedera and Litecoin at the same time, yes, but to a lesser extent. But look, whatever the case may be, knowing about this is good alpha because ETFs move markets long before they launch, and smart traders know this. The smart money knows this certainly because while most people wait for headlines, that smart money, crypto whales in some cases, are positioning themselves early. Institutions especially are already preparing. And then when approvals hit, obviously liquidity and FOMO flood in. That is when prices explode. And so it's not about chasing hype. It's about spotting filings, trends, timing your early entry before the crowd, if possible. It's not always possible, but to the extent that it is, that kind of is the secret sauce in this space. Because, of course, if you position yourself early, that is how you can optimize your profits from this. Look, let me know what your thoughts are when it comes to these ETFs. I think I gave an honest, kind of modest take on how much of a catalyst each one of these are going to be. So I have kind of cautious optimism, I suppose, but curious to hear your thoughts. Let me know your feedback in the comments below. And also be sure to join our social media discussions. Those are happening on X and on Discord. You can find those links in the description below.